In this video, we're going to talk about what triggers an IRS audit. What if a simple mistake on your tax return could unleash an IRS audit? Are you unknowingly waving a red flag? Filing your taxes can feel like you're navigating a minefield, and the last thing you need or want is to trigger an IRS audit. But did you know that certain red flags significantly increase your chances of being audited? After years of working with the IRS, I have learned the top 3 red flags that could put you under the IRS microscope, and I will share with you ways to avoid them. First on the list is claiming disproportionately high deductions relatively to your income. While it is essential to claim all the deductions you're entitled to, excessive deductions can raise eyebrows. So what is the meaning of this? If your deductions are significantly higher than what's typical for your income brackets, the IRS may see this as a red flag for potential errors or fraudulent claims. So if I have to pick 3 items that the IRS consistently audits, are the following 3. Number 1, charitable contributions, which is when you're donating a large percentage of your income to charitable organizations. Number 2, business expenses, especially in cash-intensive businesses or in those with substantial travel or entertainment costs. And number 3, home office deductions. And they want to see if you're overstating the percentage of your home used exclusively for business. So here's my tip to you. Maintain meticulous records and documentation for all deductions claimed. If you have substantial deductions, be prepared to provide evidence to substantiate them. Consider consulting a tax professional to ensure your deductions are reasonable and in compliance. The second red flag is underreporting your income. The IRS receives copies of all of your W-2s and all of your 1099s, and their automated system cross-references these forms to your return. This means that failing to report all your income, whether intentionally or accidentally, can lead to audits and penalties. So what is the area that is often overlooked? Income from platforms like Uber, Airbnb will always issue you a 1099. And starting in 2024, companies like Zelle, Cash App, Venmo, all those companies will start issuing 1099s, even when the money went to personal accounts. Before we continue with this video, if you know someone who's currently having problems with the IRS, please share this video with them. If you discover an error after filing your tax returns, consider submitting an amended return promptly because the accuracy-related penalty will be eliminated. And know that if you don't do it, there is a very high chance that the IRS will come back. The third red flag is reporting business losses year after year, particularly if the IRS suspects your business is not actually a business, but it's a hobby. So what does this mean? The IRS distinguishes between a legitimate business and a hobby. If you're continually reporting losses, they may investigate whether you're operating a for-profit business or a hobby, and hobby losses are not deductible. So what are the indicators of a hobby? Number 1 would essentially be lack of profit motive. There's no evidence or effort to improve profitability for the business. It's something that gives you personal pleasure, and it could be activities like photography or crafting. So here's your pro tip. Demonstrate a genuine profit motive. Keep detailed records of business plans, marketing strategies, and financial records. Show efforts to cut costs and increase revenue. If your activity is really a hobby, avoid claiming it as a business to deduct losses. If you or someone you know is experiencing an IRS audit, we can help you. Scan the QR code to schedule a free and confidential consultation with me. Let's work together to review your tax situation, minimize red flags, and ensure you're in full compliance with IRS regulations.